We believe that We Capital is the venture capital firm of choice for brilliant founders building high-growth companies on the continent for two reasons. We found out that the most important things for founders when you go out to build a company or choosing your investor, there are two of these qualities. First, being very founder-friendly. The second is moving with conviction and speed. We have, in our 3 years of existence, supported many companies from idea, pre-seed, seed stage, up to Series A's, Series B's, and beyond. And this is because, as founders ourselves, we understand the importance of having a shoulder to lean on and experience to guide as you build your high-growth company. And so We Capital have positioned themselves, or ourselves today, as the firm who will support you through thick and thin. The second reason is that we understand the struggles of founders and the terrain they're trying to navigate. We receive applications from founders. We don't waste their time. We let them know if there's an alignment between what we're trying to do and what they're trying to achieve. And so we usually come back to founders with a yes. Either it's to funding or it's to supporting them from the sidelines as they build their high-growth business. These two things are very, very important to funding companies.
It's been quite a journey, just that we've been on as a fund. When I first joined, we were roughly at 3 portfolio companies, and now, kind of closing out 2020, well on our way to roughly about 18, 19 portfolio companies that now span a couple of different sectors, ranging from fintech to logistics, e-commerce, and healthcare.
There is no secret sauce to get the best team. There is a mix of execution, what's the status of the team, and I think it's a mix today of getting a good team, trying to execute fast, not only being a first-time founder, and also being well connected in the ecosystem and in the industry. For example, having a good and solid background in the topic that you wanna build, that's something is definitely adding value. Being not the first-time founder, that's also something that we're also looking for, because that means you can also execute. It's not your first time building a startup. And also something that we're looking for is also what are the people, other VCs in the ecosystem looking for, and reference that you have. So I think that's kind of the 3 main criteria. But as I said before, there is no real value, and we just enjoy and really looking forward to all those calls that we have together during the due diligence, because that's where you really get to know a startup team members, right? It's not just about the product, it's about are those founders able to execute? Are those founders able to build a structured MVP for their seed or Series A next? And mostly it's also about knowing the industry that you are in.
I like to refer to what we do at We Capital and venture capital on the African continent today as VC 1.0. Why do I say this? VC 1.0 is basically catering to needs of people at the bottom of the pyramid. And when I say bottom of the pyramid, I mean physiological needs. When we started this company, we realized that there was a lot of transactions going on the African continent. The problem was that they were not digitized, and when you don't digitize, you can't measure. When you don't measure, you can't optimize for. And we invest in companies that will bolster the future of digital trade for Africa. And that's why fintech was a traditional one. But apart from fintech, we're also investing in verticals that are adjacent to all these things that make trade boom. Fintech, which also involves payments, lending, embedded finance, and the likes. We also invest heavily in logistics, mobility, and software.
At We Capital, we maintain a focus on pre-seed and seed investments. coming in oftentimes as the first institutional investor. And for us, what that means is backing founders. Like, we are very much operating a people-driven business. And what we're looking for is smart, hungry, ambitious, talented founders that kind of bring this localized context and armed with strong domain knowledge of the problems that they seek to solve.
Hi everyone, I'm Tonye, and I'm the founder and CEO of MPX, and we are building a freight shipping marketplace with a trade finance solution helping African businesses move import and exports shipment in and out of the continent. So before starting MPX, I worked in the shipping logistics industry for nearly a decade, and I saw the pain points and the problems and figured out technology can help solve these problems. And so in 2018, we started building a platform, our first version, and that's when I bumped into Olu, and we got talking, and he seemed interested in what we're doing. And in 2019, we finally launched our company. And at the time, we were building an Uber for offshore vessels, pretty much the oil and gas sector. But very quickly realized that was an interesting market, quite niche, but not very scalable. And we pivoted in 2020. And throughout that process, Oui Capital and our investors were with us. We're happy to see our growth and see our pivot. And I believe that really gave us the momentum to carry on despite that the change in strategy at the time. And so right now we're looking at really impacting the continent by enabling businesses move goods out of the continent. Right now, Africa imports a whole lot and we do not export enough. And so our goal is to help African businesses export goods. And we want to be at the center of accelerating Africa's trade. And we believe that with the support we've gotten so far from Oui Capital and different partners, we would achieve this. Right now, we're looking at expanding beyond Nigeria. We're currently in Nigeria, currently in the US, and looking to expand to South Africa, to Egypt, and even East Africa between 2022 and 2023. And our goal really is to be at the center of accelerating Africa's trade with technology and with people. And Oui Capital has been quite instrumental from being our first yes to, even at the time, co-pitching with us in a few early calls we had back in 2019, and introducing us to other VCs and other investors that have helped us till date, even around products and hiring. We've gotten tremendous support from Oui Capital, and I believe they're one of the most genuine VCs out there supporting African startups, and we're happy and proud of what their growth and where they are right now, and we want to grow with them as long as we are in business. Thanks.
4 major things we look for when we're funding companies. First of all, we're looking for a strong and well-bonded team. Second thing, we're looking for a company solving a big problem on the African continent. Third thing, product must be directed at a large addressable market. Fourth, you must create positive impact with the product.
Hi, my name is Mugwena. I am a co-founder and CEO at Akiba Digital. We are a fintech startup based in Johannesburg, South Africa, and we are trying to make financing inclusive for all. Our purpose as a company is to unlock financial opportunities for society and small businesses using alternative data. To date, we have 2 products. On the one side, a financing marketplace for small businesses to unlock all sorts of financing that is relevant and affordable for any stage of their business. And we basically connect them to financiers that extend the capital directly to the small businesses. On the other side, we've built a suite of enterprise products, more like a lending as a service platform to enable lenders as well as micro lenders to basically prepare to extend credit to the new age consumers that are basically digital. Our vision as a company is to unlock financial opportunities for all, and our mission is to use alternative data to make financing accessible to everyone. So our growth plan at Akiba is to be present in 2 to 3 markets in Africa. This is, I think the first start for us is really looking at the Francophone African market, just because it's been neglected for so long. And we're seeing a lot of adoption of payment products that do make our product a lot more right for those type of markets. Post the 3 years, we're looking at being in at least 20 markets. And following that, obviously looking at a global expansion, particularly in the developing markets such as Southeast Asia as well as South America. I think looking at this growth plan kind of gives me shivers given where we started. I remember a year ago, we were literally a team of 3 people, and we've grown, I think, something like 11,000x, so 11,000%. And that means, the team has obviously grown more than 30 people at this stage. Starting a fintech out of bootstrapping as founders, and getting here feels a bit like an achievement, given our journey getting here, which is maybe a story for another day. But in a nutshell, we've had so many pivots and civils along the last 2 to 3 years as a fintech, and so many challenges such as regulations, such as fundraising. And it is sort of refreshing to have met investors like Oui Capital that have just dove into the journey with us and made it clear where we're headed to, and saw the vision and kind of refined it with us. So we're very excited to be working with Oui Capital. They are one of our leading investors in our pre-seed round. They've brought in a whole bunch of other investors. Not only that, they also brought in partners, made introductions, have held our hand during our construction of our commercial strategies. And I am so grateful that I can now even call Olu a close friend. On WhatsApp, anytime there is a wall that I hit, I'm happy to just ping the team, and they are so available. So I'm very grateful for that. Thanks.
The most important thing we look for in founders is the founder DNA. We're looking for a strong team, a well-bonded, strong team that's solving a big problem. And when we say big problems, we mean big, audacious problems that will change the way we live on the African continent. Another thing we look for is teams that are building where there is a large addressable market. This allows you to reach more people, serve more customers, and create superior financial performance. The last thing we look for when we're funding founders is to fund founders who are building solutions.
Africa is still a largely informal market where 50% of economic output is done through informal activities, employing 85% of the population. Most of these trades are done through cash. There is certainly the need to introduce digital payments to ease the cost of cash handling, as well as to improve people's access to credit. Timat is building a two-sided payment ecosystem that is easing the way merchants can accept digital payments, as well as providing affordable, convenient ways consumers can get access to finance, while essentially accelerating the pace of digital payments in emerging markets. Our mission is to help people find financial happiness by providing frictionless ways in which merchants can accept digital payments, as well as affordable, convenient ways for consumers to also access digital finance through frictionless channels also. Today, we process about $4 billion worth of transactions for 100,000 plus merchants who service about 50 million customers. For the future, we're looking forward to a continuous growth in Nigeria, as well as expansion of our operations to new countries. Oui Capital is one of our early investors. They have been with us through the stages from seeking product market fit to now getting to traction. Olu has been especially helpful in advisory. Sometimes I go to Olu and we talk through strategy, talk through governance, talk through key matters that affect the company. They have also been helpful in our investment campaigns, from introducing potential investors to sometimes just thinking through the round, our narrative, our positioning. And they've also been helpful in hiring, especially some of our key hires. Actually, Oui Capital is one of our most interesting and helpful partners.
In the last 4 years, we've seen a growth in the amount of venture capital coming to the African continent. We've seen these numbers grow at about 35% year on year. Usually in venture capital, the amount of funding that's coming in is usually a proxy for the exit opportunities. 4 years ago, what we had was basically seed rounds, a few seed rounds across the continent. Today, we're seeing Series Bs and Series Cs, and companies acquiring other companies. And what we see today as the opportunity for exits is in twofold. First of all, the M&A activity that's starting to pick up. The second is opportunities for secondary sales for early stage companies like ours. So we can recycle this capital and fund even younger entrepreneurs. So we see those two really emerging. The IPO market has been a little dormant for the last few years, but we've seen a lot of funding activity. And this Series B, Series C funding activities usually create exit opportunities for early stage investors and allow late stage investors who bring a unique set of eyes to be able to get on the cap tables of those companies. So today, I would say the M&As stand as a strong exit opportunity for early stage investors like us, and also the opportunities to exit.
With respect to exit strategies, we continue to see a maturation of the African technology ecosystem. When I kind of think back to when I first started in the space in 2019, merger and acquisition activity was just kind of far and few. And over the years, we've seen like a steady increase in said activity. Whether it's seeing the acquisition of Paystack by Stripe, going for $200 million, I believe, in October 2020, and also too just kind of seeing local players kind of make concerted efforts to kind of consolidate and grow and expand their footprint domestically. We've seen companies like MFS Africa to kind of take the charge in that sense, and it's a harbinger of greater things to come. When we kind of get to the space where we're seeing increased liquidity in the ecosystem, it inspires greater confidence with respect to investing.